All right, in this lesson, we are going to talk about having bank accounts and how we reconcile the balance that the bank tells us we should have with the balance that we show on our general ledger cash account. So, a couple of things you should have discovered in the PowerPoint when you reviewed it is when we set up a bank account, we normally have signature cards. So, the people who are authorized to sign on that bank account will sign a signature card. The bank is supposed to match that signature with the checks that are drawn through that account. You will also, getting the bank statement allows us to see what happened, what transacted in our account. Here we can maybe spot some things, some irregularities that may have occurred. Someone wrote a check to someone we don't really know, or we see that our deposits are just high as we thought they should be, etc. So another control feature here is the person who reconciles that bank statement to the balance that we say that we have should not be the same person who writes the checks. It should not be the same person who deposits the checks. So it should be someone who does not have an active involvement with that bank account by either signing the checks or depositing the funds. So let's turn our attention now to problem 6-4A. You will do the problem 6-4B in your homework assignment. So that will be very similar to what we do here. Now, you're not normally going to have everything laid out for you as cleanly and nicely as I have done here for your bank reconciliation. But in your job, once you're employed or if you're running your own business, you'll establish something like this. You'll come up with a template that you'll use because you will do this every month. Every month you get a bank statement. Every month you will see whether or not or you will adjust it with your cash balance. So let's look at how come it's out of balance. We'll kind of talk through that as we work through this. So if we look at problem 6-4A, we'll go right to item A. On July 1st, 31st, the company's cash account has a $27,497 debit balance. Okay, so that's my book balance. I'm going to go ahead and put that over here, 27497. Its July bank statement shows that we should have a balance of 27,233. So that's the bank says I have 27,233. Now, we might have things, well, we might have some deposits that we have on our accounting records that haven't cleared the bank yet. We might have some checks that we've deducted from our cash balance that haven't cleared the bank yet. They haven't gone through. So those are a couple of the big things that almost always will be there, and then we'll see a few others as well. So let's look, we went through all of the checks and we checked them off to see if they went through, and if they went through at the amount that they were supposed to, the same amount that we wrote it or recorded it at, because we could make an error there also. We see that we've got a few checks that are outstanding in item B. So down here, I'm going to subtract those from my bank statement balance because I haven't come out of that balance yet. I have them out of my book balance, but not out of my bank balance. So let's go ahead and enter those. Check 3031 for 1482. Check 3065 for 382. And check number 3069 for 2281. So how you would do this is you would be going through your actual cash ledger and comparing it to the checks that are listed on your bank statement and checking them off. So the ones that haven't cleared will be sitting there for you to take out of your bank statement balance. And the next month then, this is kind of where you start, you'll see if those checks cleared in the August statement. All right, so here we have these outstanding checks. We're going to sum those up. And we're going to, well, let's not do anything with that yet. So we have a total of $4,145 of outstanding checks. As we were checking off our checks with our bank statement, we also came across this item in number C. We see that we had check number 3056 that we wrote out for our rent expense. We correctly wrote it as $1,270, but we entered it wrong in our accounting records. We only entered $1,250. So the correct amount of the check is 1,270, and we wrote it right, cleared our bank account correctly, but we have it wrong in our general ledger. So what should we do with that? We should bring that over here and deduct it from our book balance, right? Because it's an additional $20 that we didn't deduct. It was supposed to be 1270, it is 1250. So we'll just say error and check 3056. And the amount of that error is $20. So it's supposed to be 1270 and we recorded it as 1250. So that could go the other way also, right? If we had recorded it as 1210 and it was, or if we had recorded it as 1310, let's say, but it was really 1270, then we would add $40 to our book balance. Next, we see that the July bank statement in item D shows the bank collected $7,955 cash on a note for branch. So we didn't know that that had come in until we saw our bank statement. So that is something that we need to add to our book balance. So up here we'll call that proceeds from note. And the amount is 7955. In item E, we see that the bank statement is showing us we had an $805 NSF check. That means somebody wrote us a check and the check did not clear their bank. So they had advanced the funds to us, didn't clear their bank, and so now the funds have been withdrawn from our account. So we have that recorded as a deposit on our book balance, right? But we now have to take it out because we didn't really get it. So we'll just call this NSF check. And that amount is 805. Again, we see in item F that the July statement shows that we had a $25 bank service charge, so we haven't recorded that either. We'll call that our service charge for $25. So these are all things that we've been discovering as we've been looking over our bank statement and comparing it to what we have in our general ledger. Branch's July 31st daily cash receipts of $11,514 were placed in the bank's night depository on that date. So we can drive up to the bank and there's a secure location that we can put our cash with our deposit information in it. So we have recorded that in our bank balance, our book balance, our book balance on our general ledger includes the $11,514. However, it isn't included in our bank statement balance, so we have to add it over there. So let's come on over here, and under add, we're going to call this deposit. It's like a deposit in transit, but we'll call it deposit of July 31 so that we remember it's there, because this becomes a reconciling item for the next month. We have to remember, make sure that it'll be on our August statement, and we have to remember that we had it back in July. So that amount is 11,514. I think we're at the end. Yes, so that was all of our items. So now we'll just go ahead and add everything up. I'm going to sum these two. It's asking for a subtotal there. And then from there, I'm going to subtract the outstanding checks. So now it looks like my adjusted bank balance is $34,602. So my goal at the end of my reconciliation is for my adjusted bank balance and my adjusted book balance to be the same number. So let's go up here and see what we've got. We're going to sum these two. And we're going to sum up all of the deductions. And our adjusted book balance then is the $35,452 minus the deductions, $850, and so we have a balance of $34,602. So we're in balance. That's a good thing. And then next month in August, we'll do it all over again. We'll start out checking off to see what cleared our bank statements. we'll have to remember to come back here and look for that deposit and those checks that were outstanding, and those will be on the next month's bank statement, so we know they're not outstanding anymore. We had them in the July reconciliation. The next part of this asks us to prepare the journal entries. So now we started our balance in our ledger is 27,497, right? We've got to get that balance to the correct amount, the adjusted book balance of 34,602. So how do we do that? We've got to record all of these transactions that happen. So we're going to record the addition and the subtractions. On July 31st, we have that note collection, the proceeds from the note. So that will be a debit to cash because we have to add it to cash, right? For the 79.55. And then we're going to credit the notes receivable because somebody paid us off on that notes receivable and they no longer owe it to us. So we'll credit that and zero that out. The next one we have is, okay, so it tells us about the charge account for the NSF check. So look at what it's asking for you to record here. It's not necessarily the one we have next, but we know this is going to reduce our cash. So this is a check that came back from our customer. We note who it is, and we put it in accounts receivable for E. Shaw. Now owes us $805, and we're going to credit cash, 805. So if we had tacked on a fee for an NSF charge, we would have debited the accounts receivable. Let's say we wanted to charge him $25 for the NSF check for our cost of having to try to collect it and our additional accounting work. So then we would debit his account for $830. We would credit cash for $805, and we would credit NSF service fees or something like that for $25. But in this case, we didn't do that, or we weren't told to. The next one we have is recording that bank service fee. So that was our service charge for $25. In that one, it tells us in the problem to debit miscellaneous expense. So that's what we'll do. We'll debit miscellaneous expense and we'll credit cash for the $25. Many companies also have an account just called bank charges. So if they do, that's what you would use. And finally, we have that error that we made for the check that we wrote for our rent. So we have to increase the rent expense because we have it wrong for $20, and we will credit cash for the $20. And that's it. You now did a bank reconciliation. That concludes this module. You're now ready to do the homework and take the exam. Good luck.